Hi, this is Jade Foray with Tax Sale Support. I'm here with Steven Swenson, and this is actually the first video of what is to be the Tax Sale Titans weekly podcast. And so this is going to be something that we're going to be doing, I guess, for a lot of reasons. We want to be able to share training content and good opportunities. Really, there's a lot of things that we want to be able to share with people, every week.
Yeah, exactly. So we're going to be doing this podcast each week. We're going to be reviewing a number of different things, including looking at upcoming deals. We're going to be reviewing tax sale training. We have a lot of things planned, so we're excited you guys are listening to this, and we hope that you continue to listen each week.
Yeah. So to start off with, the first thing we want to do is just really just I think offer our appreciation for all of our members and for the YouTube members and subscribers. We want to just give a special shout out to some of those people like Roseanne and Tony and Felix and all of our YouTube subscribers.
Yeah, definitely. We appreciate all of you guys. We appreciate the YouTube members and also all of our members on taxsalesupport.com. That's our membership website. So we appreciate all of you guys, even the ones that aren't subscribed following. We appreciate your spending some time listening to us here.
Yeah, you bet. Okay, so the lineup for today, some of the things that we're going to be talking about, we're going to cover just a couple things here with news and updates, and we're going to discuss the trending tip here of the week. Then we're going to look at a deal of the week, and then from there, a section that we're kind of looking forward to, a what were they thinking section. We've oftentimes come across properties that, or deals that didn't necessarily make sense. Why did somebody pay this much? And in this section, we're going to be able to kind of highlight some of those.
Yeah, and then we'll go ahead and finish it off with different questions from our YouTube subscribers. So we'll go ahead and answer. During the training tip of the week this week, we're going to be talking about tax lien foreclosures and tax deed foreclosures. So we're going to break those down for you. And then during the deal of the week, we're going to be looking at an upcoming Los Angeles County tax sale. So we're going to go review the sale, look at some of the properties, check them out, and we hope that today's going to be a pretty good training for y'all.
But first, before we do that, if you haven't been to Tax Sale Secrets and subscribed there, that's something that you should do. We're going to be producing these videos all the time, and so anytime we come up with them, we'd love to have you aboard. And don't forget to hit the notification bell.
Yeah, absolutely. It's free to subscribe. Join the family. Would love to have you.
Okay. I'm going to pull this right here out of the way from me now, because for news and announcements here, actually, there are several things here we want to discuss. There are actually some sales that were coming up, and then there's also some events that we have that we are doing over the next month. So we want to make sure everybody knows about those.
Yeah, right now in Pennsylvania, they are conducting their upset auctions. In fact, a couple of weeks ago, we put out a deal of the week video that we looked at some of the Pennsylvania upset sales. We have a lot of them listed on our website. And so those are going to be taking place. Also, Bid for Assets going to be having auctions in California. We already mentioned that we're going to be looking at the deal of the week and a California auction, but they also have a bunch of Washington auctions that are going to be taking place between now and really the first of the year.
Yeah. Now, in terms of the 3-day workshops that we're going to be putting on, those are coming up here in October, actually pretty soon. So in the Baltimore, Maryland area, we're going to be there October 7th through the 9th. And then in the Miami, Florida area, we're going to be there October 14th through the 16th. Houston, we're going to be in Houston, Texas, October 28th through the 30th. So lots of events here over the next 30 days. If you're in any of those areas, we'd love to have you out to one of our 3 days. And we actually have lowered the price too. It's only $2.99 to attend.
Yeah, exactly. For these three events, we went ahead and dropped the price to $2.99, and we're also going to include 6 months membership to taxsalesupport.com. So that's a $240 value just in itself. So if it's something you're interested, let us know. You can go ahead and go to our website, contact us, and we can let you know more about event details.
Yeah, so the first thing we want to talk about here in the training tip of the week is tax sale foreclosures. How exactly do tax sale foreclosures work? What do we mean by that? So it's a topic that I think gets misunderstood for a lot of investors that don't fully understand the process.
Yeah, absolutely. Really, when we acquiring property through a tax sale, there's really two ways we can acquire it. We can either acquire it through a tax lien foreclosure or a tax deed foreclosure. And we're going to go through and talk about the differences in each one of these.
Yeah. So if uh, if we are dealing with a state that offers tax liens, then tax lien foreclosure basically is what happens when the tax lien reaches the end of the redemption period and the lien holder is able to initiate foreclosure on the property. So some states are going to assist or really handle the foreclosure process for you in a lot of ways. Like for instance, Florida and South Carolina are examples of states that have self-executing foreclosures. That essentially they're going to handle all of the foreclosure proceedings. All we have to do is fill out apply for a deed, or essentially let the county know that we're prepared to foreclose. Other states, though, are going to require you to do quite a bit more. They may not handle any part of it, and so you'll need to get an attorney so that you can handle the foreclosure of the property.
Yeah, exactly. So in states like Arizona and Nebraska, in a non-self-executing states, and a lot of states are going to use this strategy. We're going to need to hire an attorney. We're going to need to contact them. It's probably going to cost at least a couple of $1,000s, probably between $2,000 to $4,000, and it can take anywhere between 2 to 3 months on the short end, up to 6 months. Generally, so it's going to take a time frame. And really, when it comes to tax lien foreclosure, we're really talking about a small percentage of properties. Generally, we're talking about 5% nationwide. So 95% of tax liens are going to redeem. You're not going to go to the end of the tax lien foreclosure, but there is going to be, roughly 5%. In some areas, it'll be higher than that, depending on their redemption periods, their state laws, their interest rates. There's some areas that it may be 7 or 8%, and other areas where it's 2 or 3%. It really kind of depends on these individual states, but once the property gets to the end of the redemption period, we can go ahead and foreclose on it, and that's where you really can acquire properties for literally pennies on the dollar.
Yeah, literally the cheapest prices you can find anywhere are going to be on tax liens that end up getting foreclosed on by lien holders, because those properties are not being offered up in some kind of an auction. They're being foreclosed on for the delinquent taxes that were owed, and basically that's it. I mean, aside from covering the foreclosure cost, you're getting that property for almost nothing. I mean, very little. Basically, just the property taxes owed during that time period there to foreclose. So that's where you can get properties for such amazing deals there, and like Steve was saying, for literally pennies on the dollar. If you buy tax liens and foreclose on it, are able to foreclose on them, you can acquire some great properties.
Yeah, in fact, here are some really great property examples. This first one here on the top, we can see has a assessed value of 174,000, had a market value of around 259, 260,000. Now, the total delinquent tax amount was $7,774, so just under $8,000. Now, in addition to that, there's also going to be foreclosure fees and attorney fees. So there may have been an extra 2 to 5 grand in attorney fees. Uh, but once that was done, all in, you're still looking at a property that was picked up for under 20 grand, that was worth 170, 260,000.
Yeah, it's why it's rare. It doesn't happen. It doesn't happen with most of the tax liens out there. The vast majority of the time, they just end up redeeming at some point during that redemption period, or even after. I mean, you can be partway through this, the foreclosure process, and anytime somebody comes up with the money, I mean, the property will redeem. So, you can take a property to foreclosure even, and still have it redeem, because they get that opportunity right up until right up until the foreclosure is completed. So, um, you know, tax liens are one of the ways that you can acquire properties. But downside, though, you could say, is that it's difficult to predict exactly which properties are going to lead to foreclosure and which ones are going to redeem. That's always a bit of a guess. There is another way, though, with tax sales that you can acquire properties, and that's through tax deed foreclosures.
Yeah, yeah, absolutely. With tax deed foreclosures within these states, the county doesn't sell liens to the public. What they usually do is they wait until their redemption period is passed, or the amount of time frame that they allow before they foreclose. Generally, it's going to be probably 3 to 4 or 5 years. But once a property owner's been delinquent that time, the county will have sent out notices and let them know they're eventually just going to foreclose on the property and then offer up that property to tax deed auction. So when we're purchasing tax deeds, we're acquiring the property, we're buying the property itself.
Yeah, it is a property sale, and the county is essentially just playing a little bit longer term, waiting process here while they are, waiting to get their money. They're just going to offer the properties themselves up though for auction, and then, use the money that way to recover and to pay off for the services that they need to offer. So generally, tax deed bidding is normally going to start, um, uh, you know, at the back taxes that are owed. Now, the foreclosure itself is usually handled by the county, but in some cases, law firms can assist some counties in doing it. Um, for us as investors, though, what we can normally take is that the bidding is usually going to start with everything is owed in back taxes and fees, and they are generally going to be offered in some kind of an auction format so that the public has the opportunity to buy it. It has to be fair. In other words, the county can't sell the tax sale properties. They couldn't sell the properties to somebody there, who had preference in the county. It has to be something that's offered publicly.
Yeah, with most tax deeds, it's just going to be like any type of auction that you may have attended. They're going to start with an opening bid amount, and then the high bidder wins the property. Now, one thing to consider about tax deed investing is you're most likely going to need to have the cash on hand, whether that be certified funds, if not at the time of auction or after the auction, but within a short period of time afterwards. Now, some counties will allow a certain deposit down and then the rest to be paid within 24 or 48 hours. But you need to come up with the money within a relatively short period of time. In fact, when we were attending some over the last couple of years, as we went to Oklahoma for some of their tax deed auctions, after bidding on the property, you've got to take over the funds right there and purchase it right there once you went ahead and done winning the property.
Yeah. In fact, some of the counties, yeah, some of the counties make it harder in some ways to pay. Yeah, there's some counties that have lots of cash. People actually showing up there with cash to pay. But most, you can get your deposit directly wired in and put money on the books so that it's a little bit easier to pay afterwards. So you don't have to scramble, and you can always get it back afterwards too if you don't buy anything. But yeah, let's take a look at examples here of some tax deeds.
Yeah, in fact, these are just a couple of tax deed properties that we picked up a few years ago in Florida. The top property was picked up for 10 grand, had a value then at 52,000, and was renting out about $900 a month. And part of the reason we wanted to show these properties today is because since these were purchased a few years ago, the value on these properties has gone up significantly. That first property, we ended up just flipping it to somebody that had been renting the property. Was able to do a quick flip. The bottom property actually rented out for a period of 4 years. But during that time, not only was that property renting out, earning residual income every single month, so even within the first year and a half, it paid for itself. Uh,
Yeah, it's going up in value.
yeah, exactly. It was, over that time, it nearly went up double in value.
Yeah, yeah, an excellent market, and yeah, there are tax deeds available, throughout the country. There are lots of areas there where the county will foreclose on the properties, and you can buy them up either from the auction, or if they don't sell at auction, those same properties will be offered in many cases over the counter, starting off just with what's owed, in back taxes. So there's opportunities there too.
Yeah, definitely. So as far as tax liens, most tax liens aren't going to end up in foreclosure. Most are going to redeem, and you're just going to make back your money and your interest rate. Now, there's certain things you can do to increase your chances. For example, some of our coaching students were investing in some tax liens that were already into their redemption period. So it had a 3-year redemption period, and they're purchasing them a year and a half, 2 years into the redemption period. That's going to increase your chances because the longer the lien goes or the closer it gets to the redemption period, the higher chance you have of actually owning the property or going to the foreclosure.
Yeah. The longer it goes without redeeming, the higher the chances are, that it could result in foreclosure. And so there are also things you can do to kind of pick out properties that may have, a higher chance. Like for instance, when you look at at the owner, if the owner is listed as somebody that's well, first off, owner occupied is always somebody that's going to be far more involved there with the process, and it does redeem more often than not. But having out of state owners sometimes, or out of area owners, can be a sign sometimes that it will increase the chances that a property could result in foreclosure. There's all sorts of little things that you can pick out to try to increase that chance. But ultimately, if it's just property that you want, there's always the tax deed auctions where you can just pick out properties starting off with what's owed, in their back taxes, and buy it outright.
Yeah, in fact, just the properties we just looked at, that first property was somebody that had been renting the property for years, and the owner was an out-of-state investor. And then the next property was somebody who had it as a kind of a summer home, Florida home, and and had passed on. And so, both of those weren't necessarily, they were going to be more likely to foreclose on, which it did end up in a tax lien foreclosure that put them to the Florida deed sale. But they both were the type of properties that had a higher chance of going through the foreclosure because you had two property owners, one of them deceased, obviously, with not heirs, so there was nothing to really take care of. And then the other property where it was somebody who had rented the property, and if I remember, he'd almost kind of lost contact. He might have been living there for free for the last 6 months or a year or something, before purchasing it.
Yeah, there's always interesting stories there around it. Now, uh, you know, it's different with, like, for instance, if we're dealing with redemption deeds that are offered in a few different places around the country, like Texas, and Georgia. Redemption deeds have a higher chance of ownership than just liens will. And so we've got to be careful. When we're buying redemption deeds, we have to treat that more like property ownership. Unlike liens, we don't always treat liens like we're buying a property outright, just because they have such a high chance of ownership. So they don't generally require the same level of due diligence. But we do want to check and make sure of a few things. Like for instance, ensuring that the properties have value, and also making sure we know how much is owed in taxes.
Yeah, yeah. Well, and once we purchased or acquired the property, whether it be through a tax lien foreclosure, whether it be through a redemption deed that has gone at the end of the redemption period, and now you have 100% ownership, and the ability to sell the property, or just through a regular tax deed that you automatically acquire the property once you've paid for it, they've recorded it. You're at that point, you have the ability to sell it. We need to determine our selling strategy, at least in the case of tax deeds, before ever buying the property. We've at least got to have an idea. What is my end goal with this? Am I looking to sell this property as is? Is maybe some type of wholesale deal? Or am I looking to take the property, hire an attorney to clear the title so that I can sell this property just like any other property for market value? And so it's important, whether if you're how you're acquiring the property through a tax sale foreclosure, to take into account the selling strategy.
Yeah, I think that's true. Actually, I think there have been plenty of people before that have thought, hey, I can do tax sale investing, and they go out, because they know an auction's happening and they happen to buy something, and suddenly, they don't know what to do next, really, or they're not sure. They go to sell it and they realize that it doesn't have an insurable title. that it's it's a tax deed, it's not a warranty deed, run into issues and stuff like that. You really do need to know exactly who your most likely audience or buyer is going to be, for that property, and how you're going to sell it. Because, yeah, there are lots of deals out there that you can do, little wholesale deals, that can work. But you've got to, I think going into it, it really helps if you know what your plan is going to be ahead of time. If you're going to be offering it that way, or if you're going to need to take it through quiet title.
Yeah, definitely. Well, hopefully that gives you guys at least a kind of a quick breakdown of what is a tax lien foreclosure, what is a tax deed foreclosure, and kind of how they work.
Yeah. Now, if you haven't been to secretsoftaxlieninvesting.com yet, this is definitely a site you should go and check out. You can subscribe there. You can download ebooks we have there. We have free ebooks you can download, as well as webinars we do there sometimes. We have webinars we'll do that you can register for by visiting the site.
Yeah, exactly. You can go ahead and click the link in the description or up in the heading as well. That'll go ahead and take you to Secrets of Tax Lien. You can download the free ebook. So if you're interested in learning more, the Secrets ebook will help give you some of that basic understanding to go out there and start looking at auctions and start participating.
Yeah, you bet. Okay, so now what we're going to do here is we're going to go and check out the Los Angeles County sale, which the list just posted for that. The sale is coming up here on October 26th through an online auction provider, Bid for Assets.
Yeah, exactly. This is going to be our deal of the week video, and so we're going to go check out this California auction, but we're going to go check it out online.
Okay.
So the first thing we're going to generally do is go ahead and um, go to our website, but here we went ahead and pulled it up already on Bid for Assets.
Okay. So I think we can see it right here. There's a couple of different sales. Right now, there's also Washington, that is holding some sales right now. We can see a few of those. They're just wrapping up here, like the Berks County, but this is the one we're going to check out right now.
Yeah, in fact, that Berks County was one of the Deal of the Week videos that we did a few weeks ago to talk more about Pennsylvania.
Yeah. Now, what we can see here is, the deposit deadline here if you want to register for it, and we can see the total number of properties they have at 677 parcels up for auction, starting at about $1,400. And then we can also see here, if we go down here and look at the auction folders, if you have an account there on Bid for Assets, you can download the Excel version of the list, but here is the electronic version of the list.
Yeah, definitely. And with a list of this size or an auction of this size, if we're going to really start breaking down this list, what we're going to do is we're going to download that Excel version so that we can start using the quick glance method and bracketing and start reviewing that list and narrowing it down to properties that fit our investment objectives. So, if we're looking here, we can see a lot of information on these properties, the opening bid amount, the property value. And if we only have $30,000 to invest, then we're not going to spend time looking at properties that open up for $100,000 because that's not a property that we have the ability to buy right now.
Yeah. In fact, this is a pretty big list, and so if we were going to look at it seriously, we would need a way to kind of weed it out and narrow it down a little bit more. So if we were focusing on vacant land, then we would eliminate, all of the improved properties. Or if we're focusing on improved properties, then it might be the opposite, and we would, eliminate all of the vacant land. And then look for other ways that we could begin to kind of narrow it down a little bit. For instance, we could focus on the pricing and kind of start to bracket the list down into groups of pricing. There are different ways that you can avoid spending too much time looking at everything, because that's really not the purpose. You don't need to look at everything, on a 700 property auction list. it's more important that you kind of use your time effectively and try to find more effective ways to highlight properties that have potential.
Yeah, well, and then with this list, we have the improvement value and we have the land value. So if you were only looking for land, it's pretty easy to determine which properties you're going to eliminate. You're going to eliminate the properties with improvements. Vice versa, if you were only looking for land, we would go ahead and eliminate those properties that had improvements, and we're automatically going to narrow down that list. Then we're going to figure out how much we have to invest, and we're going to be able to narrow down the list more. But let's go ahead and let's look at a couple of these properties and see what's available through their auction.
Yeah, so let's see here. What we can do is we can actually see the very first property on the list. It looks to be a single family home. The uh, it shows us on record here that it has a $21,000 opening bid. We can see the address here for it. And if we go down, we can see it has a $57,000 land value and $132,000 improvement value.
Yeah. Over on the left-hand side, we can see additional information, the parcel number, the address, you can see where it says view parcel map, and then also view GIS, which is going to be the online map.
Yeah, so if we actually click on that, hit agree here, go out there and plug that number in.
And what he's going to have to do with this one, he's going to have to type in the parcel number. There's some auctions that will automatically, once you click on the link, will include the parcel number, and it'll automatically pull up the record for you. Here, they're just giving you the website, and we're going to have to go on there and type in the parcel number. And then one thing as well, as we can see, once the map came up, it is just an overhead map, doesn't include any satellite imagery. And so we'd have to go over to the base maps or to the layers to be able to find some of that information.
Yeah, in fact,
One thing that's interesting though is if this is just the lot, we can see that part of this home is off of the lot.
yeah, which that's an interesting point. We can see that this lot is really too small for this house. In fact, something that is kind of interesting that you can figure out is if we were looking, oftentimes when properties are foreclosed on, if they are owned by the same people, it'll be one right after the other, and so they'll be listed, in order sometimes on lists. And so if we were to look at the next property down, let's see what this is. So it says it's just a vacant lot. We can see, it gives it a value there, but we've got that APN number. So let's pull that up.
Well, and part of the reason why this is important is if you were to buy that first property that includes the home on it, you want to buy this second property as well. Otherwise it's going to, you're going to set yourself up for a lawsuit. So if we're ever looking at tax sale property, be sure to check out the other property that are surrounding this and see, like in this case, where this property is essentially the back half of it. Really, these two lots should be combined into one lot, but right now they're being taxed as two separate lots.
Yeah, and so they were foreclosed on as two separate lots, therefore they're being sold separately, even though it looks like it's all part of the same building. Yeah, kind of interesting situation there, where you can see. So in this case, it's listed as vacant land, but in reality, it's not really much vacant land there. It's mostly home,
Well,
or partly home anyway.
and that's because the improvements are included on that first property.
Yeah,
They're not giving that property, even though there is structure on it, they're giving the value of the structure to the larger property. But even in that case, we're going to want to own both of them. And really, I would probably look to the county to see if we can combine those so that they're just one property. Because I think if you were to go look this up, in fact, when I was looking up some of the other maps, it looked like it was one lot. It was only separated through the county record.
yeah, that's interesting. Okay, and so really just those two first properties were pretty interesting. But there are so many more that we could look at. Even the next property down, the third one down. We see here this one has a higher opening bid amount, current bid or opening bid of 72,000. And we can see it has a listed land value of 253 and improvement value of 194.
Yeah, definitely. We have some of that same information. What we're automatically going to go do is grab that address and look up the online map. Then we can also take that take the parcel number, look up the online map, then take that address and look up and see if we can find any Google Street View or any type of Zillow value, Redfin value to give us an indication of its true value or closer to its market value.
Yeah, and there we can actually see that address right there. And if we wanted to see if we can get, another image here of what it is. We can enter it in that way here. And okay, so that is actually the property in question here. So it has a $72,000 opening bid amount. Yes, but it's actually a pretty nice house for looking at it. This is it right here. Let's see what it's valued at.
Well, and we're looking there at a 2015, Street View, and we mention this all the time, but we're going to continue mentioning it because we still see people making this mistake. Don't judge the online information. You're going to have some type of on-site search done before just bidding on it sight unseen.
Yeah, but it has an estimated market of over $1 million. And it looks like yeah, in fact, yeah, it looks like it
tipped out at 1.2.
Yeah, yeah. In May, it was as high as 1.2. So it's started to come down a little bit with the housing prices coming down. But yeah, great property that you could go after starting at under 10% of value. It's starting for about 7% of value.
Yeah, it looks to be a real good property. And if we were interested in it, we'd do some more research, we'd go and do some on-site evaluations. But yeah, definitely a really nice property. And this is just one. We've only looked at just the few first properties on the list of 600.
Yeah, first three, that's it. So yeah, there are some great deals on this list. Okay, so I think we should move on here to the next section. Let's see here. Actually, let me exit out of that. Somehow I think I must have lost my place. Let me get it back to here. Okay. So I think the next thing we're going to do here is this new section that we want to start to cover where we have a chance at. It's going to be called What Were You Thinking? And it's where we can look at different deals that didn't make sense to us or cases that we find where it just seems that people paid too much.
Yeah, definitely. We see this happen all the time, and we're hoping to shame some of these people, because really they're losing money. We don't want anyone to lose money, and it makes it more competitive. And we're not going to, say where exactly this is or what auction, but we want to review properties where we don't know what they were thinking and kind of review these different types of deals so that you know what to watch for.
Yeah, so this one is kind of an interesting property. So it just sold at auction here recently, and we can see it's a fairly small lot. Lot size is only it's only 6,000 square feet, and we can see that it sold. So yeah, it opened up for only $3,000, but it ended up selling for 67,000. That's always a problem when you have a relatively low opening bid amount, but something that sells for many times over that.
Yeah, definitely. Well, and we can see that their assessed value down here has it at 9,662. Underneath their market value, they said it was valued at 36,000. So I'm sure that this was purchased, I would imagine, by somebody that hadn't done the research into it, and assumed, well, Florida's hot right now. If I pay, I don't know what they were thinking, but you can see that right there within the county zoning code, it talks about how in this particular area, the minimum lot area or the minimum lot size to build a property or to build a home is 15,000 square feet. Now this particular lot is only 6,000 square feet. So automatically we know that this lot is not usable as far as actually buildable. And so really it doesn't have even $10,000 value or $36,000 value because you can't build on it. In fact, if we look at some of the other lots surrounding this property, we can see that none of the other homes that are in the area are on that small of a lot, which automatically should be a red flag to begin with.
Yeah, yeah, and who knows why this could very well have just been two people that were bidding very aggressively, and neither one of them wanted to yield, or maybe it was something else. I don't know. Maybe it's possible that the surrounding homeowner you think was bidding on to extend their backyard.
Really, we've seen this happen all the time. There's two bidders that are bidding against each other, and they think that the other bidder knows something that they don't know, and so they're willing to bid aggressively. In fact, we saw this just recently in one of the live auctions that we attended with some of our advanced students. As we're there at the auction, we had drove past and looked at properties that we knew were completely condemned. Meaning that if you were going to buy this property, you were going to be into it just getting the property cleaned up and
Torn down.
yeah, torn down. It was going to cost more than the lot was going to be worth. So you were automatically going to be losing by buying this property. And we would see two people bid on that property to close to market value, thinking that one of the investors knew, both of them thinking that the other person knew more than they did and that they were bidding it that aggressively because they still thought it was a good deal. And you had two people that were bidding, without doing any of the due diligence. And I think that that's kind of what happened here. You had people bidding online. This was in an aggressive auction in a hot area of investing. And so, they got emotionally involved into it, started bidding aggressively. And with even just spending 2 minutes, 2 seconds on the county website under the assessor information, they had the zoning code right there within the documents that this lot was not going to be big enough to be built on.
Yeah. Yeah, in fact, yeah, you can see the arrows pointing to it down there, where it says minimum lot area 15,000 square feet. But there will always be people losing money at tax sales. Yeah, you don't want to be one of them. And so the best way to do that is by educating yourself, by being an educated investor, and not just by walking in and trying to do it by the seat of your pants.
Yeah, in fact, just the fact that you guys are listening to this video shows that you guys aren't going to make these type of mistakes. If you're interested in additional training, check out our membership program. We really do believe it's the best value in tax sale education. You can check out our website, month-to-month membership at $39 a month. You can cancel at any time. 12-month membership is only $29 a month it comes out to. Or we also have our YouTube membership starting as little as $2.99.
Yeah, we would. I think no matter how you join, we would love to have you. I think if you are looking at tax liens and deeds seriously, you really should be a member. I think we can provide everything from training to the tax solicit to make it easier for those that are trying to get started.
Yeah, so in this section, what we want to do is we want to answer some questions from our YouTube subscribers. If you have questions, go ahead and ask them in the chat section. Maybe we'll feature one of your questions in an upcoming video. But the first question is from Casey. Says, new to this, so when going into a deed auction, putting down a deposit of say $2,000, if I don't buy anything, do you get it back? Absolutely. You're going to get back your deposit usually within 2 weeks. The longest generally be about a month in most cases, and you're going to get that money back. Now, in some cases, they may have a registration fee, a $20 registration fee, $25 registration fee that may not be refundable, but your deposit in every case that we know of, you're going to get back if you don't buy anything.
Yeah, yeah, absolutely. Okay, let's see here. The next one. See, when starting foreclosure process, how long does that take? That is a good question, and it's one that varies by state a bit, and a few other factors. Um, Generally, though, foreclosure, if you're looking at a time frame to get through it, you could probably look at it between 2 to 3 months on a short end, and probably more like 6 to 8 on a longer end.
Yeah, absolutely. Great question, Jennifer. Like Shade said, it's going to take 3 to 6 months. In fact, I think we talked a little bit about that earlier when we were talking about tax lien foreclosures during our tax sale tip. But it's also, like we mentioned then, it's probably going to cost anywhere between $2,000 on the low end up to $5,000, depending on the state and how much is involved. We have another question from the wealthy scientist that asks, I am subscribed, how do we buy the ebook? Like we mentioned a little earlier, you don't need to buy the ebook. All you need to do is go to Tax Sale Secrets, and you can go ahead and download it for free.
Yeah, yeah. Now, another question here, which is a great question. It's by RN Guy, and he says, "You speak of a foreclosure wiping out all encumbrances and attachments, liens, with the exception of governmental liens and tax liens. Does a foreclosure wipe out all heir claims to the property? So, say grandma left it to me and she passed away and the taxes went unpaid. It went into tax foreclosure. A new buyer paid the taxes and received the quitclaim deed, but now I want it back." He says, "This webinar is awesome. I want more." It's a great question, though, because it really does. The foreclosure process is a powerful process. It does wipe out any kind of liens and encumbrances, attachments, claims. It's what we call a first position lien, and most liens issued by a government are considered first position liens, and that's why is so that they have power to take over other claims. Because what would happen is if they didn't have that first position power, then when it came time to try to enforce property taxes, they wouldn't have the ability to actually foreclose on the property because the other liens would have claim over them. So these first position liens, with the power they have, is basically to take precedence over any other kind of claim. And if foreclosure ends up getting executed, so if it ends up getting completed, then any claims to the property basically get wiped out, even if there was an error. I mean, not an error. Okay, so if your grandma left it to you, if the property taxes were current, and there was some kind of an error made, then it would be the county's job to fix that problem and get the property back to you somehow. Uh, Although errors like that don't generally happen, in most cases, if the taxes weren't paid and the property was foreclosed on, once after the auction, it's generally lost forever, unless you live like in a redemption deed state.
Yeah, I mean, it's, just if your grandma left you the property, you would just be like any other property owner. They're going to go ahead and go through the notification process. And if your grandma left you the property, it would be on you to update the county with your county record information. I mean, with your address and current information, so they can contact you about the property taxes, and they can contact you, about anything like a foreclosure. So in this type of case, like Shade said, the foreclosure is going to go ahead and wipe that out. And it's very, very rare where somebody may have actually paid the property taxes. There's a couple of instances where this isn't the case, like, for example, in New Mexico or through a Pennsylvania upset sale, where some types of mortgages or liens judgments can survive. But when we're talking about a tax deed foreclosure in most states, that judicial foreclosure is going to wipe out everything other than other governmental liens, something like a nuisance lien through a city for coming out and cutting the grass.
Yeah,
That's going to be the most common type.
in fact, just thinking about Pennsylvania now, I would have to totally change my answer because Pennsylvania really is totally different in that they have multiple sales that are happening. So it would actually be possible if you lived in Pennsylvania, to have the property go through an auction and you could still redeem it. You could still get it back. You still have rights and claims there, to it until it gets past a certain sale where it actually kind of, wipes out or
Well,
extinguishes those other claims.
yeah, the claims are still valid, but the property ownership transfers at the upset sale. So when you're buying at the upset sale, you're still going to become owner of the property. You could live in the property, you could rent the property, but if there is a mortgage or if there is some type of judgment on the property, they can still stick to the property until, like Shade said, after it's gone through the judicial sale, where that's where they're going to eliminate any of those liens or judgments. In fact, that kind of ends up with the last question, which is a good question. What happens to properties that don't get sold at the auction? And in most cases, they can make them available over the counter. They may auction or hold a resale. Like, for example, in California, in the deal of the week when we were reviewing LA, in California, what happens is they'll go ahead and take those properties that don't sell, and many times they'll have a resale where they'll offer them again for sale, sometimes offering them at a discounted price. If not, there's land banks that sometimes the county will go ahead and issue to, but they'll usually have some method of reoffering those properties for sale that don't get sold at the sale.
Yeah, yeah, whether it be over the counter or through subsequent auctions. Yeah, especially now, it's so much easier for counties to be able to offer properties in a variety of ways. So, yeah, there are a lot of opportunities now to get some of those properties after the sale, either through a land bank or through the county and their over the counter list.
Well, and counties are using every opportunity to be able to get in, revenue coming in for their county. So, for example, Arizona has tax lien certificates, but what a lot of the counties are now doing is that the tax liens that are over the counter, that don't get purchased, they'll go ahead and foreclose on and offer it up at tax deed sale so they can get their revenue coming in. South Carolina will have tax lien sales, but the liens that don't get purchased, they'll go ahead and sell them as tax deeds through their tax forfeited land sales on tax liens that went past the year redemption period, and the county acquired the deed. They're going to sell those deeds. They're going to do whatever they can to keep offering those properties for sale, and that way they can get the revenue coming in and put a new property owner in them.
Yeah, yeah, really, it's how the system is designed to work. It requires the investors to be able to come in and be able to fix, or handle, to be able to present investment opportunities, to be able to buy up those liens or those deeds, so the county continue to operate. Um, well, awesome. I think that is pretty well everything we had planned here for this first episode, I think, of Tax Sale Titans.
Yeah, Tax Sale Titans. We appreciate you guys participating. We want to make Titans out of you guys in your lives and in investing. So please subscribe, give us a thumbs up, and comment. All that stuff helps grow the channel, and we appreciate anyone watching, and then of course all of our members and students.
Yeah, yeah. Thank you for all of you that have been here through the whole thing. We appreciate your time, and we can't wait. Join us next time.
Yep. Thanks again.